no matter who's lending you money, whether it's for a consumer or a business, there's like the 3 C's, and it's credit, collateral, and cash flow. So there you go. So the credit, most businesses that I've seen up to $30, $40 million a year have never built business credit. So that's kind of tip number one.
What's going on, Sales Ascenders? Happy Wednesday. It's Chris here. We are going to dive into another member spotlight. And these keep stacking up and stacking up. This is going to be fire as well. I know every business owner, I know every sales and marketing professional wants to hear this conversation because it's literally what's happening in the front lines. We're talking about one of the most common objections that all of us face at some point, one way or another, in acquiring new business. It's money, it's funding, and it's the objection that sounds like, I want to jump in, I'm ready, but I just don't have the money. And we know, all of us in this group, fellow entrepreneurs, business owners, we know that a poor mind is usually thinking about, I can't afford it, and a wealthy mind is typically thinking about, how can I afford it? Or how expensive is it for me to not do this? We know that we need to lean on other systems, people, resources, agency in order to grow. We can go further together than we can by ourselves. That is why we are joined today by a fellow entrepreneur, business owner, and friend, Dan. We're going to bring him out in just a second. He has a unique way of solving this problem. You're going to want to tune in. So with that said, let's have a conversation, Dan.
All right, Chris, awesome, man. I love your enthusiasm. You must be such an awesome leader for your group, and I'd love to be a part of that more often, just to kind of get that going every day. And yeah, I love your little your rich dad element of how can I afford it? Really changing the mindset. And I think everything in business is just such. I mean, if we're talking marketing, if we're talking funding, if we're talking entrepreneurship, health, it's like mindset is such an undervalued and underlooked way of looking at things. And sometimes it just takes a little shift, right? To like tweak something a little bit, and then all of a sudden you're off to the races. So yeah, I'm excited to talk about this with you. So, let me know what specific things you want to talk about here. I'll just kind of jump right in and talk about that, because that's obviously something I'm super familiar with.
Yeah, right on, Dan. Well, thank you for joining us, and all fellow sales ascenders. Per the conversation that we've had, I know that you're going to bring a lot of value, and that's specifically why we're talking here. Is in our conversation, there's a couple things that you mentioned. I was like, this is so good, and more people need to hear this. And so let's start with this concept of non-traditional funding, access to resources that most businesses aren't aware that they have access to in terms of capital, why that affects the business, but also why that can also help them in their acquisition part of their business. So let's start with just non-traditional funding.
Yeah, great. And I like to always kind of start with some statistics, because they paint the picture in the beginning. And it's like, if you were to look, and this has become especially prevalent and problematic, really, given our current state of the economy due to COVID and all that. And this is going to be applicable if somebody's watching this years from this, and hopefully by then all this will be over. But, they say that the average small business owner has only 27 days worth of cash. They say that, according to the SBA, one of the main reasons so many small businesses fail is because of lack of capital. So this theme keeps coming up. And why is it? What are the categories where businesses don't have cash? I mean, there's kind of really two. One would be you're a startup and you just don't have money to get going, and you're bootstrapping. And so that's, in many cases, a legitimate reason to not have cash to do the things that you need to do. And if you're selling to those types of businesses, obviously you have to be aware of that. And that's a legitimate objection that you would be hard pressed to get over, no matter how good of a salesperson you are. The other, and I think the more common thing, is that there's cash flow issues. So maybe it's a company that's doing good revenue, they're doing sales, but for whatever reason, they just don't have a lot left over. Maybe the marketing behind what they're doing to generate leads, it's very profitable, but it takes a while to actually, maybe they break even at the front end with a smaller product or service, and then later they become more profitable. So those are the two main reasons. So I think from a pure selling standpoint, and looking at the nature of businesses that you're targeting, and I'm assuming that and this would apply to small and medium businesses. So I would say small businesses are kind of like anything less than 10 million a year in revenue. Medium would probably be somewhere between 10 and let's say 100. So I think we can all kind of agree on that. If you're calling on enterprise accounts over $100 million a year, you're in a completely different ballpark. And what I'm saying here is not really going to be relevant to that. But I think that's safe to say we're good there.
Yeah.
You know, and the thing is that you have the traditional banking world. I won't necessarily name names, but you know, the retail banks that you see on the streets, probably a lot of them that you're doing your banking with, your checking and savings bank. They're in the business of lending money on a secured basis. That's what they've always been used to. That's what they're used to. So whether you're going to get a mortgage or you're going to get a business loan, business or banks, traditional banks, they want safety. They're not in a high risk business. They're not venture capitalists. They're not angel investors. They do loans that and for the sake of their shareholders and their depositors aren't going to lose money. And so what they do is they create collateral in the form of a real estate or equipment or something hard like that. And if it goes beyond that, then they're going to probably say no because they don't want to take on too much risk.
So just to jump in here real quick, the things that you're mentioning, I think are important. Anytime, anything there's for us, like as business owners, if we're investing in some service or product to accelerate our growth, if it's confusing, we don't understand it, and it seems risky, we're just not going to do it. Just like our customers, when we are in a sales conversation, a confused mind is not a buying mind. And so that I think that's the mindset that you're describing with these banks, which is exactly why getting funding as a small business, as an agency owner, becomes a massive problem. But it doesn't have to be, and I know that's kind of where it's leading into the non-traditional options that you're describing.
Exactly. So right. So whether there's no collateral or the credit's bad, they don't want to take that additional risk. And then you get into the types of businesses that you serve. If a lot of you here are or you serve digital-based businesses, e-com, info products, agencies, even SaaS companies, these banks, they don't understand those business models. They're used to lending to manufacturing companies and roofing companies and restaurants, things they understand. And like you said, the confused mind basically defaults to saying no as a preservation, rightfully so. So what that did was that causes all these businesses that have low cash flow, that have low cash on hand, that need growth capital to do different things to keep moving forward, to not have any answers. Even the SBA, which insures a lot of business loans, requires 680 plus credit. You have to put together a pretty robust business plan, and it could take 30 to 45 days. A lot of times businesses don't have the luxury of waiting, because when we talk at our company about fully fundable, about funding, it's kind of like, the question sometimes is, what could you do if you had an extra $20, $50, $100, $500,000? Do you have any opportunities or emergencies that require that? And obviously, what we're talking here for the most part are growth opportunities. And you were talking about if you miss out on them, that's an opportunity cost. And so when there's an opportunity that comes across, like maybe a business gets pitched or gets offered some sort of agency services to run advertising, to do some sort of email campaign, to build funnels for them, do whatever the kind of things that you're doing, they say, well, I'm doing fine, but I don't have additional money to really do what you're asking me to do. And sometimes they just say that, sometimes that's just an objection to that presentation, no matter what. And so if you have the opportunity to actually offer them a way to, I'm going to back into this, but if you can take away that objection at the very least, it may not always result in this, but let me go give you the example. If you were selling real estate or you're selling cars, for example, it would be ridiculous to think, right, that you could do that with any success without having a finance department. If you're a realtor, right, you have a mortgage person. If you're a car salesperson, you have the finance department. The amount
financing is assumed.
Say again?
It's assumed that there's financing. It's
assumed, and it makes it go around, and nobody really has a problem with it. The difference, though, is that those are consumer products, right? So you're not buying a car to make money necessarily, unless it's a fleet vehicle or something like that. You're not buying your primary residence to do that. That's why when you get into speculative or investment properties and you get mortgages on those are more expensive because they're just higher risk by nature, even though they're collateralized. So I think here's where the first piece of mindset comes in. If you're selling something to small businesses or medium-sized businesses, it doesn't really ever occur to you that you could be offering funding just because it's never really done. And I've heard people say, well, why would if they don't have the cash to pay for the services, then I don't want them as a client. Well, here's the reality. of all the money, let's just call it hundreds of billions of dollars potentially per year in the US and probably the world, that small businesses get loans, can you guess what like the number 1 or 2 most common use of funds always is?
What is it?
I know you know the answer we talked about, but it's, marketing and advertising. And so borrowed money is being used to pay for marketing and advertising every single day. The question is, are the people that are selling to those businesses proactively offering it? Because again, sometimes I'll mention this to people that own agencies or sell other things B2B, and they'll say, I don't really get asked about it. Well, of course you don't get asked about it. You're not going to get asked about it. It's like I'm not claiming that this is similar to, Apple and Steve Jobs, but he said, nobody would have asked for the iPod because they didn't know that it was a possibility. I had to tell them that it was a possibility. Henry Ford said, if I would have asked people what they really wanted, they would have said faster horses. They wouldn't have said they wanted cars. And not that funding is this like super innovative thing, but using it as a tool in that way can be. And so that's the deal, right? So if they're using the money for that, and if you're using it in the sales presentations and saying, well, that's fine that you don't have a budget. A lot of clients, a lot of businesses do use bank money. And then of course the natural question they're going to ask is, well, what's the rate? And that's another mindset thing, because as a consumer, you should be conditioned to be sensitive to what your interest rates are and what your fees are, because you're not making money from money. There's no leverage in that way. It's not an arbitrage play, to use a fancy word, which happens to be one of my favorite words. So anyway, I don't want to go too far down the pipe. I want to see if you wanted to chime in with anything, but we're starting to kind of build the picture here that businesses use borrowed money for all sorts of things. Marketing, advertising is one of them. These are services, if they're provided by good professionals, like probably everybody here on this call, can actually turn $1 into $2, $3, $5, $10. And so the interest rate that's being paid on this is sort of insignificant, really, whether it's 5% or 15% or even 25%. And we can get into that a little bit more. But if you're making 200, 500% on your money, then why wouldn't you just want to, use other people's money? You made kind of a reference that I think is attributable a lot to Kiyosaki and Rich Dad Poor Dad. And a lot of people, they want to quote all these kind of wealth building strategies, but unless you're really leveraging other people's money, you're kind of missing a really big part of it. And that would be one way to really do that.
I think a couple things that you're mentioning. One is strategy. So what is the growth strategy that's set in place? And what is the anticipated or actual value of that strategy? If it's 300%, 500% growth, what is the value to acquire that growth? Is it 8%? Is it 20%? There's always a cost. There's always a cost, time or money or both. And so when we come into, I think I like the analogy that you're making, at least the way that I'm hearing it, is let's flip to the ad space, right? If we're doing Facebook ads, Google ads, whatever, we can talk ROAS, we can talk, what it costs per lead, all those different breakdowns. Ultimately, let's talk what it costs to acquire a new customer, because that's kind of the punchline. So if it costs me, $500 to acquire a new customer, I'm make the lifetime average value of that customer is say $1,200. Perfect. We got a good system. Now it's profitable. Let's accelerate it. Funding could be a great option to actually follow that same logic to accomplish the growth a little bit quicker. So I like how you articulated that. What I'd like to do for everyone listening here, a lot of us are coaches. A lot of us are consultants. A lot of us are service-based, providers. And I think a really good, tangible, physical environment to visualize this all in is a live event. And we're probably already thinking about them, missing them, not being, at this point, we haven't been able to travel and connect with you. So we're all been like stranded even more on Entrepreneur Island. So let's all just envision that we're all hanging out together finally again, masterminding, the buzz is in the air, and we're at a live mastermind event. And we get the pitch from stage for the $20, $30, $50, $100,000 thing, package, program, whatever, right? Now, then there's the table rush. And everyone listening right now, apply this to your business. It can be virtual, it can be online, but now we're all going back, right? You see all the new prospects, the new customers coming back to the table, and they're going to what? Put it on a credit card, pay it in full, call the bank wire, or if you have a money guy if you are able to help with that transaction for non-traditional funding, which I love the example you gave, cars, retail products, financing is assumed. It's normal. Why not it be normal in other valuable purchases? And the truth is, we've all probably, listening to this, we've probably already been to those events. We've been through that same buying process ourselves. And so having this in place is a huge component to the systems for all of us listening. And if you haven't heard of this or even thought to really consider it, listen to Dan and pay attention to this. I've watched this, like fellow entrepreneurs, friends, they're making millions and they're impacting people at scale in a really, really impressive way. And this is one of their key components to their system. So Dan, I said a lot of things, but I wanted to paint that environment. I wanted to paint that picture. Now everyone listening, watching is running back to the table and they have a Dan to go talk to. What does that conversation sound like?
Yeah, and I think it needs to be said too, to work into that question of the different types of funding that are available, because even within that question, there's a few different things. So let me just delineate that. Maybe I should have started with it, but I think you have really three categories of funding when it comes to business funding. You have the traditional retail banking environment, which I already mentioned, and you know what? If somebody comes to me and they say, I need 20,000, I need 100,000, whatever it gets me, my first question is always going to be, did you go to your bank to get money first? Because I don't want to give them something that's more expensive just because I'm going to make money from doing it. I want to say, get the most amount of money that you can from your bank if they're willing to get it, and then go beyond that. Let me give you an example real quick, and then if it's okay, I'll work back into your question. Yeah. And I think I told you this when we started. So back in December, we had a referral of a client that that has an e-commerce business. They do about 36 million a year in revenue. They've been around 6-7 years. Great growth trajectory. Let's just say they're in the beverage industry, okay? And that's pretty awesome volume. Well, they had with their major retail bank, a bank that all of you would know by name, a $250,000 line of credit. Now, the owner of this business was a sole owner. He had high 600s, low 700 credit. So like barely prime, like still technically subprime, no business credit to speak of, no collateral. Okay, so this is considered very high risk, even though this is a company that's doing a lot of revenue. And I also need to say that no matter who's lending you money, whether it's for consumer or business, there's like the 3 C's, and it's credit, collateral, and cash flow. So there you go. So the credit, most businesses that I've seen up to $30-40 million a year have never built business credit. So that's kind of tip number one, is if you know how, we can even help with that as well. There's ways to build your business credit up so that you have many active trade lines or accounts that are reporting that can boost the approvability. It's not going to necessarily give you the ability to get money just on the business without a personal guarantee. That's a more advanced topic. But anyway, so they're looking at credit, the collateral. What can we take from you if you default on the loan? And then cash flow, which means basically, do you have enough cash flow coming through to service the loan and get it paid off? So back to the retail banking thing, they were tapped out, and they said, we need to buy inventory within a few days. Now, normally when I talk about this type of program, which I'll get into, these are not banks. These are private equity funds, basically, or private lending funds that have raised money, or private investors that are lending money to these businesses. And so, they're looking at a whole scope of different things, and they can fund really fast. The traditional banking route is going to could be weeks, could be even months in some cases. We funded stuff below $100,000 in this capacity with low documentation in like 2 days. Okay.
Whoa.
If it's over $100,000, then usually you need maybe like a full financial package. So profit and loss statement, balance sheet, pretty basic stuff. But under 100,000, it could be just bank statements. It's pretty remarkable. And they have to verify who you are. So this particular company, I said, I don't know if I can get you 500. They wanted 500,000 to buy inventory from overseas before the tax year ended. And I said, okay, I'm up for the challenge. Let me see what we can do. And we did. We got it in 2 business days on like December 30th, wired into the account, and they paid, because of the high risk of that business, despite their things, something like 30-something%. And it was a short-term payback, like a year. Okay, so to a lot of people, that's
30%.
Shock factor, right? How could you possibly do that? Well, but if you're making, 2, 3, 5 times 200, 300, 500% on your money, then what's 30%? And that's why I always say, like, if you ask any of you that own agencies, or somebody asks you, what's a good cost per lead? It's an arbitrary, irrelevant number because it depends on what you're going to convert it to be, right? I'll pay $1,000 for a lead if for every 4 of them it's going to be a $20,000 sale, so it's kind of irrelevant. So he got it. So retail banking, that's going to be the only case if you have security in the form of real estate or equipment where you're going to get even possibly single-digit interest rates. Other than that, you're talking double digits no matter what. On the other side of the spectrum are angel investors and venture capitalists, right? So these are people who are investing not based on the financials or the objective things. They're looking very subjectively. They're looking at the management team. They're looking at intellectual property. And you kind of have to be a unicorn really to get this kind of money. And if any of you have pitched investors like that are savvy, they put you through the ringer. And by the way, if they do fund you, they're taking equity, they're taking possibly profit sharing. So in reality, that's the most expensive money. And then somewhere in the middle is going to be where we play, which is this alternative non-bank private business lending. It can happen fast. But again, having to get through that mindset of is 20% or 25% really that expensive compared to what am I missing if I don't get it, or compared to what happens if I bring in a partner, an investor. So within that scope, you have SBA has non-bank lenders. So you could go to like a major bank and they will do SBA loans. SBA is a government insurance of loans, okay? And so there are certain parameters, and the banks usually will add things to them. They can't take away a criteria and make it looser. They can only make it tighter, and they usually do. The non-bank lenders that do SBA kind of keep it as loose as possible. So that's number one. Number two, there's term loans, lines of credit, and then revenue advances. And then there's also something that's become kind of popular within like business opportunity niches and stuff, which is business credit card stacking, which is where you need about 680, 700 plus credit, and they will on your behalf go out, and we could do this too, and get you 3, 4, 5, 8 business credit cards
at one time.
Yeah, because it's all about the timing, how you time the inquiries and all that, and those are mostly no doc. So it's all kind of the whole credit industry is sort of a game, anyway. So you're kind of just like doing that, and you're making sure that obviously they're not going to they're never going to get more than they can extend. It's a pretty perfect system in terms of approvals, and they're going to give you what they know you can get back. So we've done that and gotten collectively $20, $50, $100, maybe even $150,000 in total credit, and they built up their business. The problem with that program is that it takes a while. It takes 3 weeks to a month, and you need pretty awesome credit. And so the back of the room analogy. Now, if you're a startup and you don't have a lot of revenues, the business credit card stacking thing can work because it's all basically stated income and based on projected income. And it's really just based on your personal credit, and you get a business credit card. And so you should do that if you can. But a lot of business owners have less than 680 or 700 credit. In fact, I would say probably most of them. And so you can go as low as 500 credit. And again, the rates will be a little bit higher based on that. Maybe they'll make you pay it off sooner. But these are the ones where it's like if you had somebody in the proverbial back of the room and the person put an application, they had a conversation, they could get funding, a wire transfer within a few days. And so that's how that would work. Of course, if you go the route of angel investors, or whatever, that could take months and months and months or years to get funding. So
that fund. Let me just stop you just for a second right there. You said 2 to 3 days.
Can be as long as the docs are presented and it's not like a holiday or something.
Yeah, that process goes. And even if it's 5 days, right? That's still faster than most credit cards. Like if someone has to get a new card kind of deal.
Yep.
And so like in that case, and what type of funding is that called again?
That would either be, if the applicant has prime credit, so let's just say above 700. Okay. Maybe they even have some business credit, and their cash flow is really good. It kind of is true in some cases. Like, well, when you don't need it, you get access to it, and when you need it, that applies to a lot of things. But the better the profile, then you can get a more traditional term loan that might be like a 2-year payback and might be in the teens interest rate wise. That would still be a quick one that could be done in a few days. And then that's just a term loan or a line of credit. If the credit is lesser or there's other risky factors, then it would be what they call a revenue advance, sometimes called merchant cash advances. They're more expensive, but it is what it is. And, at the same time, if let's just say somebody has really good credit, but they need money really fast, they could maybe get a term loan or even a cash advance, do what they need, and simultaneously apply for SBA. And by the time the SBA comes along, one of the things you can do with SBA funds, which is a 6% interest rate, it's really, really great, about as good as you can get. You can use that to pay off the debts. There's no prepayment penalties. So, we represent multiple different lenders. We're a concierge service, so we're not like pigeonholed into one or the other. We're not pushing certain products. We want people to come to us and say, the company's called Fully Fundable for a reason. Ultimately, it's like a good chiropractor, right? A good chiropractor is going to really wish that you don't have to keep coming back every week. They're going to try to treat you and get you in a condition to where you can come back for maintenance once in a while. And same thing. Now, if you get your company to a point where you don't need funding, but you still want to use it as leverage, because why not use other people's money if you can, then that's the best case scenario that you could be in. But we ultimately are looking at ways where we can help the business build their business credit, build their personal credit, get to a position where even if we have to give them something short term to take care of an opportunity or emergency, ultimately long term they're in a better position. And again, this should be good news for anybody who is a business that's growing or anybody who's selling to businesses, because you don't even have to know that much about it. And I think one of the concerns that people have from this is, well, I don't know how to talk about it. I don't know how to quote rates. Well, that's what we do. So we would say, look, it could be anything. It could be all across the board. There's many different programs. There's many different scenarios. The bottom line is, if you're doing revenue, then you might be able to get a loan you didn't think you could. And if you could, then we can put that to good use, and we can help manage those campaigns for you and turn $1 into 2 or 3 or 5. Here's the chance. A lot of people love to brag about the ROAS, right? Your return on ad spend. And it's like, well, yeah, we're getting our clients 300, 400. Okay, fine. Well, then you should encourage them to borrow as much money as possible at way less than that. Be responsible. Don't be stupid. Everything has risk to it, right? Just running a business in general and taking your time to do that is a risk. So anyway, hopefully that explains kind of the big picture of how these programs all work together. And a lot of people don't really know. It's more like the traditional local brick and mortar businesses that know about these kind of programs. For whatever reason, it hasn't really been pushed into the digital marketing community too much, but that's part of what we're trying to do.
That makes perfect sense. So I kind of like the journey that we've been going on. We've talked about financing, the role that it plays in a purchase, specifically in the retail place. And now you've just kind of brought it full circle where, hey, we're talking about the service-based provider, mastermind, coaching, consulting, like service-based businesses, and what funding looks like in this. Because I know, at least for many like colleagues I've talked with, fellow entrepreneurs, is credit card or just cash and jumping in. The concept and the conversation we're having today about cash flow is still, in my opinion, is still king. And so it's a strategy, it's an equation, specifically what we're talking about here. Some people listening to this, if you're like, oh my gosh, sounds cool, I'm still not quite sure what to do. That's why you have people like Dan. They're like, okay, I can just ask him the question. Let's run this out a little bit. Is this actually a good idea? Is this a good time to take on a little bit more capital to implement this goal, this outcome, et cetera? So I think it's really important to what you're going through. And I think a lot of people shy away from it because it seems overwhelming, or I'm not really sure. It seems more than it's worth. And I think we need just taking the step back. You're someone that can help people walk through that process and say, hey, here's why it's actually a good idea, or here's why you should not do this at this time. And that's really helpful.
Yeah, it's got to be. We do take a consultative approach. That's why I said, and let me give you a couple examples, and actually something that you wouldn't even think would be a funding thing that I think would be of interest to especially the agencies, or any B2B companies. Number one is, did you already go to your bank? So we're really kind of making sure that they are getting served properly, that they're either not able to get money from their bank or that they didn't get enough. But here's another thing, right? It's not just loans, right? Because that might be, some people just have an inherently allergic reaction to debt. They don't want it at all. Great. Love to see the comments, Sean. Thank you very much for that. Here's an example, right? So this is kind of thinking outside the box. There's a family friend, very close family friend that has owned for 30 years in Chicago, where I'm from, a commercial collection agency. And when most people think of collection agencies, they think of consumer collection. They think of these kind of like nefarious practices and that sort of thing. But what you may not know is that in the commercial space, most of the companies that do this, and there aren't that many, are very, very different. And they take a very professional approach. And if you are in the business of invoicing clients for anything, if you don't collect money up front, which in many of these subset agencies, copywriting services, funnel building, websites, you're in a situation where you're either maybe collecting half up front and half later. I bet you there's people that are listening to this or will listen to this that are saying, I have receivables that are out there that I can't collect on, and I don't know what to do, and I don't want to be the bad guy. Well, so in many cases, that is the case. So one of the ways that you can get funding, so to speak, or improve your cash flow is to not only have better collection practices up front, but to work with a company like this that we refer clients to that takes a professional approach. They're not like, showing up at your client's business with a baseball bat or anything like that. That's like phase 3. No, I'm just kidding. But, they're very professional. They're super professional, and they say, hey, look, we're calling on behalf of this company. And they do it in a way because they know that they can't misrepresent the company. And eventually, if it gets to a point where it's like way beyond, then maybe they just let it go. Maybe they bring in legal services, but they don't start off like that. So sometimes there's found money just sitting out there. We have a family friend that owns a meat supply company in Chicago that sells to independent restaurants. At any given time, these guys have multiple 6 figures of money just not being collected in time, and it's killing their cash flow. And they're just a little bit too old school and stubborn to have anybody else handle it. But if they did, they would bring in a lot of money. So that's one thing. The other thing is, like, if clients have money in their IRAs, if you have it in a normal IRA, your retirement money, you can only use it for the products that are made available by that particular provider. And there's something called self-directed IRAs where you can have it transferred through the proper legal process, which we have a partner that does that. And then you can basically invest in shares in your own business from your IRA, because you can invest in things that you couldn't otherwise. And it's a government sponsored program. There's all sorts of guidelines. And so if you have 100,000, whatever the case may be, I think it's usually like maybe $5,000 to do the full transition over. So don't do it if you have $10,000 in there. But if you have multiple 6 figures, and then you're basically like your own lender, and you're investing in your own business as a startup or as an existing business. So it's not just business loans. There's multiple different ways we go, how do we put this puzzle together? What can we combine to get you the funding that you need? And eventually we're going to build sort of a more angel investor network. I mean, you and I are probably friends through our digital marketing networks and the American and National League. So,
that's right. We've talked about it.
We should tell people about that. But where, there's all these people with tons of money that are looking to invest in different businesses. And so in the future, we'll probably also bring in investors and do some matchmaking with that where it makes sense.
That's awesome. And just to bring everyone in the inner circle, the nest, the tree of trust, American and National League, one, that's us missing sports. The other piece of it is so there's like the Russell Brunson, ClickFunnels ecosystem that's been growing. And then there's the traffic and conversion ecosystem that's been growing in the digital marketing space. Odds are everyone watching this has been sucked into both or one of them. We were just like having fun labeling them the American and National League of like digital marketing industry. So let us know in the comments.
Ryan Dice and Russell are good friends, so it's a friendly thing, and we have interleague play. But we were just kind of, Chris and I were kind of remarking at the fact that each of us didn't know some of the main players that we were mentioning. We're like, that's actually exciting because that means that we have access to new markets within what we thought was the same space. And so it's a small world, but it's also a big world.
It's so true. So just for fun, like anyone listening to this, watching this, comment if you're more on like the ClickFunnels camp or the traffic and conversion camp, Russell or Ryan. Ryan versus Russell. There it is. That's a little bit cleaner. Cleaner. Ryan versus Russell. Let us know which side you're on.
A wrestling match, because then Russell would kick his butt.
Yeah, we got to. So clearly, we need to set up some type of like Olympic event where they have all the different things that
Ryan
they do.
Might have the vocabulary. He's got a very good vocabulary.
He does. He's a sharp guy. He's a sharp guy for sure.
Yeah.
But this is awesome. Breaking down financing. As you were saying that, I was just thinking about businesses in general. Like there's a lot of different ways to break down business, like 5 categories in terms of like onboarding and retention and acquisition. You can categorize, create these really simple frameworks around what a business is, what a business needs to do successfully in order to survive and be valuable in the marketplace. Funding is its own like sub niche area where it's like, well, here's all the assets that we have. Here's all of the like instruments or tools that are available to us that maybe all of us don't think about, i.e. business credit card stacking. Didn't know, I've known about credit cards, but I didn't know about credit card stacking strategies. or using your self-directed IRA in order to move money around, but that's only good in certain scenarios. And so I liken it to this. If you do not understand the rules of the game, it makes it impossible to win no matter how talented you are. Let's talk about LeBron James. Let's talk about, any other athlete that you guys really like. Would some champion level or even professional level athlete be winning championships if they didn't understand the rules of the game?
Nope.
No. They know them so well that they already know what's going to happen before the ref makes the call, so they can already start kind of selling the ref on how this game is going to be interpreted. You see, come on, we all see those side conversations. What's going on? The coach, there's games within the confine of rules.
That's why
we're in the marketplace. Baseball. And what's that?
You made a basketball reference, but that's why they call it inside baseball. It's kind of this inside inner sanctum, the unwritten rules that happen that we don't even get to know about unless they're mic'd up.
Exactly. Oh, Solid chimed in. She said traffic. She's on the traffic and conversion side. Right. We got one representative over there. So 0.1 for Ryan. Where are all the Russell lovers at? We need to see a Russell in the comments there.
Well, I love Russell too. I just haven't been there.
Well, you better comment for him. I'm just kidding. So, but many people, and even I'd consider myself, fairly financial literate. Like, I have my Series 6 and 63. I carried multiple different financial license. I've spent a fair amount of time in the space. At the same time, I know that there's so much I don't know. And even the stuff that using how to use it in an effective strategy, meaning application, execution, is still kind of a different piece of the puzzle. So I think you taking some time today, breaking these down, letting us know what's available is really, really important. But before we get to the last question today, for all those that are watching and do have more questions, where can they find you?
Yes, and it's, I think my name in the little title box says it, but fullyfundable.com. That's there's an inquiry form there. Let me also say this too. There's actually just two main criteria for anybody, whether it's you that's watching this that is looking for funding or just a conversation. And I'll tell you how kind of the process goes, or it's for a client, is that they either have to have, let's just say, 700 plus personal credit, and you could be a startup, or you could have low revenues, or 20,000 a month in revenue to really get the attention of lenders. So if you don't have either of those, it's a little bit tougher unless you have money in an IRA. So it's not necessarily for everybody. It's mostly for more established businesses. But again, if you have good enough credit and no revenues, that's fine. The inquiry form at fullyfundable.com, there's no intrusive information. It's basically just a little sequential form that asks, how much are you looking for? What's your business? What's your credit look like? There's nothing like that. And then if it makes sense, we'll jump on a quick call, 15 minutes, kind of, just kind of find out what direction maybe we should be taking things in. And then, if it makes sense to do an application, we have a short application that's online, maybe takes 15, 20 minutes. And then we start where we can collect some of the necessary documentation. And then, from there, depending on what it is, it could be very, very quickly. So that's that, fullyfundable.com. There's some general information on the website. That's a picture of me and my brother, who's my business partner. And so hopefully this has been a little some new information that gets people excited about taking things to the next level. And I like to also call it like the accelerated scaling method, because when you kind of pour this type of fuel on the fire, you can go faster. And one other thing I didn't mention earlier was when it comes to agencies, it's not just for selling the client to become a client, which is a big part of it, and of overcoming that objection. But think about all the clients maybe that you have that are spending $5,000, $10,000, $20,000 a month with you, and they're getting a good return, but for whatever reason, their cash flow cycle is such that they don't make the money back right away, where they can't spend more money than they are, even though it would be more profitable. And you go, man, I wish we could scale. Well, here's a perfect application to give your clients a resource to borrow, say, 50 or 100,000. Usually we can go up to about 1.5 times the monthly revenue on the term loans and the revenue advances. So keep that in mind. If they're doing 100,000 a month, can't get them $5 million, maybe like 150. Okay, so it's like that's there's got to be a realistic nature to that. But if you can help them spend twice as much on ads, then theoretically you are going to make more fee income too, and you're going to be doing them a service because you're allowing them to scale faster.
I love that. I love that. Thank you for breaking that down, sharing this with us. For the last question, I'd like to dive into a little bit more of the why. And so you've acquired this skill, you've built this skill, you've dove into this, you've clearly done your homework research, you've applied yourself in very high level networks and built great relationships. Like what drives you? Why get into this? What's the impact that you'd like to leave in business and in the world?
Wow, good question. I just have a heart for fellow entrepreneurs and small business owners, and I especially like to be able to bring things to people that maybe they didn't know existed. Everybody kind of has it in them a little bit, right? You want to be the first person that delivers some good news or kind of has a big idea. And so, or even repurposing things in different ways and kind of using things in different novel ways. And I can't see myself really spending, time with people other than entrepreneurs and business owners and helping them grow and getting the survival rate up. So really that's kind of my heart behind that, is just to see, and it could be anything from the younger serial tech-based entrepreneur all the way up to the baby boomer business owner who's, just trying to get their business to where it's enjoyable again and they can grow it one last time before they retire and sell it.
Well, all our fellow sales ascenders are here for a reason. Hopefully to consume this content and be able to go further, farther, faster with learning more about what's available to them. And also being a sales ascender in this group already implies a few things. You have some experience. You are hungry. You are motivated. You are ambitious. You're constantly looking to learn. You understand that you don't have it all figured out.
Right.
And connecting with other people and being just open-minded in terms of exchanging value and, even if you know the topic, continuing to be a student and learn. This is like a culture and an attitude and a mindset that I know has served me well. It sounds like it served you well, and you're now living that out and continue. Even being here shows that. So thank you, Dan, for taking the time to share that with all the audience and all sales ascenders. I know there's so much talent in this group. Before we close down today, if you'd like to be on a member spotlight, I think we're booked through September now, but if you'd like to get on here and you feel you have something valuable, a story, a message to share, tools, resources that have impacted you, and feel that general calling to share that with more people, this is the right platform for you. Please reach out to myself and let's have a conversation and see if the timing and the message makes sense for everyone in this audience. So Dan, you totally checked all the boxes and did awesome today. I had fun having a conversation with you. Thank you for coming out, and sales ascenders, finish strong, let's ascend.
Awesome. And by the way, if anybody wants to reach me about being like a collaborating, not necessarily for you, but for your clients, feel free to email me at dan@fullyfundable.com. I forgot to mention that. So
email
or you could fill out an inquiry for yourself and we'll still get on the phone nonetheless. But I want to encourage anybody that's selling B2B. Let's have conversations. Let's talk. Dan@fullyfundable.com. Thanks, Chris. You're awesome, man. Really appreciate you. And hopefully we'll all do some great things together.